Now case scenario number 4, this is on salary, residential status and tax computation. Three things combined together. Rajesh Sharma, age 54 years, underline 54 years. He is an Indian citizen. He is working as an assistant manager in ABC India Limited. He is getting basic salary of rupees 58,000 per month. Okay. He used to travel frequently out of India for his office work. He left India from Delhi airport. He left India on 5th October 22 and returned to India in the next year, 2nd April 23. So in current year, how many days he was in India for? He was in India from 1st April 22 till 5th October 2022. Then he is returning back to India in the next year, 2nd April. So how many days he was in India for? 30 days of April, 31 days of May, 30 days of June, 31 days of July, 31 days of August, 30 days of September and 5 days of October. Then he has not returned back till 31st March 23. He is coming back to India next year, 2nd day. However, he will not be falling under the first exception. Though he is an Indian citizen, he is not leaving India for the purpose of employment. He is already employed by ABC Limited and he is going out of India for office work. Had he been leaving ABC Limited and joining another employer abroad, then we can say that he is leaving India for employment. But he is not leaving India for employment. He is already employed and he is going out of India for his office work. Therefore, the two basic conditions applicable for him will be 182 days or more in the current previous year or 60 days or more in the current previous year plus 365 days or more in the preceding 4 previous years. However, if you calculate how many days he was in India for, the total comes to 188 days. That means he is fulfilling the first basic condition, therefore he is resident in India. However, we don't know, we don't have further details to calculate whether he is ROR or RNOR in India or not, but he is certainly resident in India. Okay, for previous year 20 to 23, following informations are relevant. Dearness allowance 10% of basic. Basic is 58,000 per month, so this will be 5,800 per month. And bracketed wording say that it is considered for retirement purposes. That means it is forming part of retirement benefits. Bonus 98,000. Bonus is taxable only if actually received. If bonus is due, then it is not taxable. We don't know anything, so we will assume that it is received. And bonus will be taxable. DNS allowance is also fully taxable. Medical allowance paid during 20 to 23 amounting to 60,000. This is allowance and it is fully taxable. Had it been medical health insurance premium, then story would have been different, but it is medical allowance, therefore fully taxable. He was also reimbursed medical bill of his mother amounting to 15,000. This is perquisite, so I'm writing it here, perquisite. Bonus is not a perquisite. DNS allowance is allowance, medical allowance is also allowance, but perquisite medical bill reimbursement is perquisite and it is fully taxable. This is reimbursement of medical bill of mother, therefore fully taxable. Had it been reimbursement of Mediclaim premium, health insurance policy premium of his mother, then it wouldn't have been taxable. But since it is reimbursement of medical bill and not Mediclaim insurance, therefore it is fully taxable. E point, he was also transferred a laptop. Well, laptop is transferred, that means sold to him. It is not given for using, it is sold by the company for 15,000 on 31st December 22. This will have to calculate it out. This is a perquisite. So I am writing P out it here. The laptop was acquired by company on 1st October 19, that is financial year 1920 for rupees 1 lakh. Company was charging depreciation at the rate of 31.666%. This is irrelevant. We don't require this. Laptop depreciation rate for calculation of perquisite, depreciation rate will be 50% under WDV method. WDV method, but only for completed years. How many years are totally completed? It does not say completed financial years, it says completed years. So it is asset sold to employee at less than market value. We'll have to find out the market value. Market value will be computed by considering the original actual cost to the employer 1 lakh rupees minus depreciation at the rate of 50% under WDV method, but only for completed years starting with 1st October 19. Company was charging depreciation at 31.666%. This is to be ignored, assuming useful life of laptop as 3 years. This is also irrelevant point, so you'll have to calculate this out, which we will calculate later. But how many years are involved? If you see, depreciation will have to be charged from 1st October 19 to 30th September 2020. Thereafter, from 1st October 20 till 30th September 2021, the laptop is transferred to him on 31st December 22. So next will be 1st October 21 to 30th September 2022. And then 30th September or rather 1st October 22 till 31st December 22 is an incomplete year. Therefore, we will not be charging depreciation for the month of October, November and December 2022. Last 3 months, 1st October 22 till 31st December 22, no depreciation will be charged for the purpose of perquisite valuation. So depreciation is to be charged for 3 years, 1, 2 and 3 at the rate of 50% under WDV method. Let's calculate. So cost is 1 lakh rupees to the employer less depreciation for year 1. First year it will be 50,000. Second year it will be 25,000. And third year it will be, we'll have to calculate it out. First year after 50,000, WDV will be 50,000. Second year depreciation will be 25,000. WDV will be 25,000. Third year depreciation will be 12,500. So total depreciation is 87,500. So the WDV of this asset laptop drops down to, if you recollect, first of all let me remind you that if computer or laptop is given by employer to employee for using it, only for using it, maybe for office purpose, maybe for personal purpose, if laptop or computer is given for using it, then there is no perquisite taxable. But here it is not given for using, here it is transferred, therefore it will be taxable. 87,500 is the WDV, sorry, 12,500 is WDV, 87,500 is the total depreciation. WDV minus whatever is charged from him. How much is charged from him? Company transfer it to him for 15,000. Therefore, perquisite value will be nil. Nothing will be taxable for this perquisite. Because for 12,500 rupee worth of laptop, company has charged him 15,000. Therefore, there is no benefit to him. F point. He was also reimbursed salary of house servant, domestic servant, 4,000 per month into 12 months. This is taxable. This is again perquisite. This will be taxable value will be 48,000. Professional tax paid by employer amounting to 2,400. If employer is paying professional tax from his own pocket, there will be two effects. Deduction will certainly be allowed under section 16, clause 3. That is for sure. But if it is primarily the responsibility of employee to pay the professional tax. If it is paid by employer, then there will be two treatment. First, it will be added in the salary as a perquisite. So this is also perquisite. First you add, then you subtract. Eventually it will get nullified, but you have to give the effect. 400 equity shares allotted by ABC India Limited, his employer, at the rate of 250 rupees per share against fair market value of share of 350. So 350 rupee worth of shares are allotted to him for 250 rupees. That means 100 rupee discount. 100 rupee is a benefit to him per share multiplied by 400 shares. 400 shares, so benefit value will be 40,000 rupees. 40,000 is a perquisite. This is called ESOP, employee stock option plan or employee stock option scheme, under which 40,000 the benefit derived by him will be chargeable to tax. Then salary is over. Short-term capital gain on sale of shares of listed company on which STT is paid amounting to 94,000. This is short-term capital gain chargeable to tax under section 111A at the rate of flat 15%. 15%. Further, Mr. Rajesh does not opt for provisions of 115B. In case he opted for 115 BAC, then he would not get deduction of standard deduction, professional tax, etc. wouldn't be allowed. Rest all will remain the same. So he is not opting for 115 BAC. Therefore, standard deduction and professional tax both will be allowed. Based on the facts of the case scenario given above, choose the most appropriate answer. 4.1. What is Mr. Rajesh Sharma's residential status? The answer is resident. We have already worked it out. He was present in India for 188 days. From 1st April till 5th October 2022. Okay, so what are the four options given? A, B, C, D. B is non-resident, C is resident but not ordinarily resident, D is resident and ordinarily resident. First is resident but can't determine resident and ordinarily resident, or resident but not ordinary resident. Correct answer is A. We can't determine because we don't have the previous information. Information is not available. What's institute's answer? Let's check. Institute's answer for 4.1 is A. Our answer is correct. I hope you are understanding. Second, 4.2, what are his taxable perquisites for AY 23-24? Taxable perquisites, so out of A, B, C, D, E, F, G, H, I, salary ends at point number H, and out of them, if you observe, basic salary is 58,000, which is not perquisite. Then dearness allowance is also not a perquisite. Bonus is also not a perquisite. Medical allowance is also allowance. Perquisite is D. We have already placed markings because I already knew about it. D is perquisite, value is 15,000. E is perquisite but value is nil, laptop. F is also perquisite, taxable value is 48,000. So nil plus, sorry, 15,000 plus nil plus 48,000 plus point number G is also perquisite, taxable value will be 2,400, and H point ESOP is also perquisite, taxable value is 40,000. So let's just mark them down. 15,000 nil, 48,000, 2,400 and 40,000. Okay, let's take the total. Only these are the perquisites, rest all is either allowance or basic salary. So 15 plus nil plus 48 plus 2,400 plus 48,000 plus 2,400 plus 40,000, 105,400. Taxable value will be 105,400. C is the answer. Let's check institute's answer. Institute's answer is also C, 105,400. Okay, next is 4.3. What is the income chargeable to tax under the head salaries in the hands of Mr. Rajesh Sharma for the AY 23-24? Okay, for income calculation under the head salary, he is not opting for 115 BAC, therefore standard deduction and professional tax will be allowed. We'll have to refer to this again, quickly refer to it. I have already memorized the question. 58,000 basic salary, DNS allowance is 10% of the same, then bonus 98,000, medical allowance 60,000. Okay, so let's just calculate it out. Basic salary is 58,000 per month into 12 months. 6,96,000. 696,000 plus DNS allowance will be 69,600. That will be 10% of this. So I'm putting it in a memory, plus 69,600. Again I'm putting it into memory. Then bonus, assuming it is received, was 98,000. Perquisites we just calculated out 105,400 in the earlier question. Allowances. Allowance is only one allowance given in point number C. That is medical allowance. Medical allowance in point number C is 60,000. Point number C. Point number B is bonus, that is already taken into account. DNS allowance is taken into account, and then D, E, F, G, H are perquisites, and I is short-term capital gain. So only C is the allowance, and allowance amount is 60,000. So allowances are 60,000. Let's take the total. Total is 10,29,000. 10,29,000. 10,29,000 minus standard deduction will be 50,000 and professional tax paid is 2,400. Professional tax had two effects. First we added as a part of perquisite, and now we are subtracting it. 50,400 is to be subtracted. So 10,29,000 minus 52,400 will be 976,600. That's a net taxable salary, 976,600. Let's check what's institute's answer. Our answer is 976,600, A point 4.3. Institute's answer is also A, 976,600. Next is 4.4. The total tax liability of Mr. Rajesh Sharma for AY 23-24. Now total tax liability, while computing tax liability, don't forget that apart from the salary 976,600, we have short-term capital gain also of 94,000, which is taxable under section 111A at the rate of 15%. So let's calculate tax liability. 94,000 into 0.15, 14,100, which I am putting into memory, 14,100 and 14,100, and then 976,600 will be taxable as per slab rate. If you recollect, in the first line it was given that Mr. Rajesh Sharma is 54 years of age. Since he is 54 years of age, basic exemption will be 2,50,000. Next 2,50,000 will be taxed at 5%, 12,500, and balance 476,600 will be taxed at 20%. 95,320. 95,320 will be the tax on this, plus 12,500. 107,820. 107,820 plus 14,100 tax on STCG. The total tax liability will be 121,920. 121,920. Surcharge will not be there, but health and education cess will be there. Why surcharge will not be there? Because income does not exceed 50 lakhs. 121,920 into 0.04, 4877. 4877. 121,920, 126,797, 126,797, rounded off to 126,800. 126,800 is our answer. Institute's answer is also 126,800, A point 126,800. Fifth and the last, assume for the purpose of this question only, that Mr. Rajesh was found owner of 5 lakh rupee worth of jewelry acquired in financial year 22-23, current year only, of which he could not provide any satisfactory explanation about the source of income. Okay, now this is governed by a concept called aggregation of income, section 69, unexplained money, bullion, jewelry, etc. And whatever undisclosed income is found for which he is not able to provide any explanation, satisfactory explanation to the assessing officer, that amount will be chargeable to tax under section 115 BBE at a flat rate of 60%. Here there is a flat tax rate of 60% plus compulsory surcharge at the rate of 25%. 25% of 60% will be 25 divided by 4, 15%. Total will be 75%, plus health and education cess at the rate of 4%. Surcharge here will be mandatory, and that too at 25% rate. 4% of 75% will be 3%, and accordingly effective tax rate will be 78%. However, what would be the tax liability without considering surcharge and health and education cess? So surcharge and health and education cess, if you ignore, the tax liability will be 60% of 5 lakh rupees of Mr. Rajesh Sharma towards such unexplained expenditure. 5 lakh into 60% will be 3 lakhs. C is the answer. Let's check what's Institute's answer. Institute's answer is also 4.5C. With that, this case scenario comes to an end. See you in the next video with case scenario 5.